Hi, everyone. My name's Jeff Praissman with Interactive Brokers, and we're here at the podcast studio with Market Chameleon's Dmitry Pargamanik and Will McBride. Hey, guys, how are you?
Hey,
Hey,
Jeff.
Jeff.
Thanks for having us.
Always my pleasure and love having you guys swing by for our monthly podcast. And you guys just put on a great webinar on option open interest, and I'm excited to have you guys in the studio so we can continue the discussion for our listeners. And so I want to start off, though, with the basics, right? Like, we're going to talk about open interest. What exactly is an options open interest?
Yeah, the options open interest, it's something that is calculated by the Options Clearing Corporation. And what it does is it's different than the volume. It shows us options that are still open, and there are positions out there that have yet to close out, get exercised, or expire. So these are open positions that exist right now in the market.
So I think that's a good point. I think people maybe confuse sometimes open interest with volume. So how exactly is open interest calculated? And is it something that's done in real time, or how often do they calculate open interest?
We get that question a lot to see open interest in real time. But the way open interest is calculated is it's something that's calculated actually overnight by the Options Clearing Corporation based on end of day settled trades. And it also takes into consideration any type of corporate actions or exercises and expirations. So it's not something that we could see real time. It doesn't get reported like a trade does in real time by the options exchange. So when you see a trade, it gets executed and then gets reported to the OPR feed, the Options Pricing Reporting Authority. However, the open interest, that's a little bit different. That's handled by the OCC. And of course, they have that reconciliation process that's overnight. And then they make the new open interest available the following day.
And just to further clarify for the listeners, essentially 1,000 option contracts to trade. And if both sides are opening, then the open interest would increase by 1,000. But if a million, and this is obviously extreme example, but a million option contracts could trade. And if one side was opening and one side was closing, the open interest would stay the exact same, correct?
Yeah, there are a lot of scenarios that people get confused because they try to compare the volume and then the change in the open interest. But because of the way they're calculated, you're exactly right. We could have a lot of volume and no change in open interest. Or we could have a lot of volume and then the open interest goes down to zero because it's closing or just gets exercised at the end of the day. So it's, or you could have volume that is much higher than the change in open interest because, like you mentioned, what if in the morning there are two sides that are opening and then in the same option, one side is closing and then a different party is opening, the volume will go up, but let's say it happens with 10 contracts, two trades, 10 contracts, and then another 10 contracts. But the open interest would only go up by 10 because the second transaction was just somebody transferring their position to a different party, but not necessarily opening a new position. So it's very important to understand how that works, especially when you're analyzing the volume and then the subsequent change in the open interest.
So that kind of leads me to my next question, like, why is open interest important? Like kind of that example, million contracts could trade and the open interest stays the same in that extreme example, but why is this important?
It tells us really how much of the previous day's volume converted to new positions, new risk. Did new positions increase or did new positions decrease based on the previous day's volume? So we could have a lot of volume, and if the open interest really stayed the same, there are no real increases in that particular option. So that's the insights you get from the open interest.
Is there a maximum limit to open interest?
Yeah, there is, and every security has a different limit, but There is a limit established there, and that's because options are a derivative. So you'd have to have a certain amount of stock available to create options on it, right? So you can't create unlimited options on a limited supply of stock. So there is a limit how much options you could have open on a particular security, which makes sense because obviously you can't have options on a million shares of stock if there's only 100,000 shares of stock outstanding. You wouldn't be able to deliver that one. So there was definitely an established limit on the open interest.
And with all our great conversations the three of us have, it always comes down to how do we utilize whatever subject we're talking about, and we're always talking about options. How is that information or that data used by investors and traders? What are some ways that open interest is used by investors and traders?
It's really no one way, and a lot of investors could use it differently, right? Mainly to get insights into the markets. But one way is to assess the liquidity of the option. And we look at a particular option and you want to see, how liquid is it? How much trading and how much positions are being carried. One way is to look at the open interest. So if there's zero open interest and there's no open positions, maybe that option could be less liquid and the price discovery is a little bit more uncertain. But if you have a lot of open interest in there, it could indicate that this option is liquid, that there's price discovery, there's easier to get a sense of what the fair value is. So that's one way to get that insight from just observing the open interest.
Now, can investors and traders also use open interest to possibly view market sentiment?
One way maybe to try to assess market sentiment is just to compare the open interest relative to its history. And if open interest is climbing or relatively high, then there's more activity around and more interest in the stock than usual. There's more betting, more risk taking in a particular security. And sometimes we'll see that around events, and that could explain the reason why open interest is increasing. Like, for example, earnings, you'll see typically an uptick in volume and increase in open interest. But there could be other reasons that could be a measurement of the trader sentiment around a stock.
Are investors able to use open interest as an indicator too for support and resistance?
You may be able to use it as some reference points. The thing with open interest and options is that you have different strikes available. So it's not like a future. You have at the money strikes, you have out of the money strikes, you have wings and tails. And by observing where there's a concentration of open interest and around what strikes, it may help assess where the traders are targeting, which ranges of strikes, and if there's any large outstanding open interest on a particular strike, which could certainly have some influence on the trading activity because it creates hedging, right? When you have a strike and you have open positions and traders want to rebalance their risk, that could create more trading activity around certain inflection points or strikes.
And I know with all our conversations, again, it all comes back to whatever data you guys are talking about analyzing, really how it can be used, right, in the real world for trading strategies. What are some ways that open interest can be utilized by traders and investors for trading strategies?
Open interest itself is not like a strategy where, like a call spread is a trading strategy because you can buy and sell. And open interest is more of just an information about an option. But that information could be useful. Look, for example, professionals like market makers use it very frequently because of and you're aware of it, the, capture the dividend on exit date, or there are other strategies where people you have American exercise options and deep in the money options like puts are become at a certain point in early exercise. And if the trader's inefficient, doesn't exercise, there are people who know how to exploit that by finding that open interest and doing carry trade in deep in the money options. And so, sometimes you have pin risk at the end of the day. People can use that based on the open interest. There's a lot during the end of the day. Yep. Or you could even anticipate order flow. If you see a very high open interest, let's say before earnings, and the earnings come out, well, you could infer from history that then there's a order flow that starts to take risk off. And you could use the open interest to try to anticipate or infer the amount of order flow that may need to be exited once the event is over. There's typically a risk off. So those are the types of situations where people may look to open interest and just to see what other people are doing, right? So what are other people doing? What are they targeting options in the short dated or longer dated, which strikes or calls or the puts? And open interest itself needs to be analyzed a little bit further because you need to go back and see what type of trading caused the increase in open interest. So, for example, you could have an increase in option open interest just because there's just buying and selling in that option. You could also have a big spread, which is part of a buy one option and sell another option, which tells you something different, right? That it was a spread. It wasn't maybe particular just targeting this option, but it was part of a strategy. So that's something you would have to go back and investigate further. How did we get to this point? How did if it was it one day or one big trade or part of a big strategy? So that's also important to go back and research.
Really, like, pretty much, I think most of the stuff we talk about, it's really just another tool in the toolbox, open interest. You
Yeah.
really have to look at several different data points and extrapolate an intelligent relationship between them to really get a clear picture. You can't just look at open interest. You can't just look at volume. You can't just look at volatility. You can't just look at spreads or non-spreads. Like, you have to take the whole package of everything and take a look at the who, the how, the what, the why, right? That's
Yeah. To answer more questions and become more informed.
And
For
then
sure.
again, just to really emphasize for our listeners that are maybe a little bit newer to the option market, again, just to clarify, open interest and volume are very different things. The absolute volume of trading is a very different data point than the open interest. And they are related, obviously, but one, it's not apples and apples either.
Yeah, exactly. You should definitely understand the differences there because it gets confusing and then you're not going to get the right insight into that open interest. And we get that, like I said, a lot of people think it's calculating in real time or it's directly correlated to the volume that they're seeing. And volume doesn't translate to a direct one for one correlation to the open interest.
Are there any other final thoughts you'd like to leave our listeners with, regarding open interest or anything, trading related, option related?
Yeah, just for investors who are interested in trading risk assessment, getting deeper insights into the options market, take a look at, you should learn about the open interest, you should learn certainly what it means, what it could indicate or signal, analyze it even from a historical perspective. Are we at is the open interest on a relatively high level? Are we at a low level? What can it mean? And certainly, even when you see those levels, then you check. You'd want to look at the implied volatilities and other things to paint yourself a more clear picture of the market that you're trading in.
Now, this is great, Dmitry. Will. And again, I'd like to remind everyone that we do a monthly podcast with Market Chameleon. We also do a monthly webinar that they were kind enough to stop by afterwards and do a deeper dive into the subject. But even if you missed the webinar, you can go to our website. You can go to education, click on webinars, and then look at previously aired, or you can go and click at contributors, click on Market Chameleon, and see all the great podcasts and webinars we've done together. And again, podcasts are available on Spotify, Amazon Music, all the usual suspects, as well as our website. And Will and Dmitry do a great YouTube show every week, trading day morning, 9 a.m., right, guys? Right before the market
Yep.
opens? Yep.
9 a.m. Yep.
Yep.
Great. Thanks, guys. Appreciate it.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Options involve risk and are not suitable for all investors. For more information, read the characteristics and risks of standardized options, or OD, which may be accessed through the link found in the podcast description page.